All right, so we are officially live. Ran Goldi, I'm super excited to be diving in with you to learn more about you and what you're working on. Uh, so you are now the CEO at First, which is a company in the blockchain space you've been working on for 4 years. Why don't
True.
we just start there? If you can just give me a little background on what you're building, what you set out to build, and where you currently are at with First.
Well, thanks, Mike. First of all, thank you for having me. Excited to be here. We've talked about this before the show. You've been doing this for almost 80 years now, which is amazing. So great honor to be one of your guests. And it's a good question the way you phrased it, right? So what are you building now? What did you actually set out to build? Because I think that for a lot of companies in crypto, those are two different responses altogether. So that's a really, really good question. I'll be more than happy to tell you that today what we're doing is we're super focused on the payment space and how people and more specifically merchants from around the world could actually use stable coins to accept payments from users, to accept payments for B2B payments, everything in the payment space. And that is the short version of that question, of that answer, sorry. The longer version, or maybe what you said, where did you start, is a whole different story. Um, I'll tell you a bit about First, and if you want later on, I can tell you a bit about my background or how I got here. Um,
Sure.
so so we've at first we started about 4 years ago, and for me, I was just out of an algo trading company. I saw a lot of how money works and how I think it didn't exactly work to the best of mankind. And maybe for me, it was blockchain was like the next logical step because I thought blockchain could actually do amazing stuff for the financial markets and maybe make them a bit more equal in a lot of terms. And we set out. We said, you know what? Let's create this crypto bank that does a lot of great stuff for mankind and for end users, and would allow them to get into this world of crypto. And the year was 2017. Bitcoin was probably around something like 2,300. But it was around that time that it was just enough that you would say to an investor, I'm doing something with crypto, and you wouldn't even finish the sentence, and they would just say, "Hey, sure, take my money." And we ended up raising $21 million of seed funding, and we started building out. We started building liquidity. We started building our custody solutions. We started building some algo trading solutions that we thought would be great for people to like passively invest part of their income in, and it was a great time for us because again, 2017, early 18, that was still a very huge positive wave in crypto, and we grew exponentially in revenue, in people. Within something like 6 months, we were already 70 people, and we were profitable. Now, this is my eighth startup. I have never been profitable in the first 6 months of any of my startups. Those who actually made it till let's call it to either IPO or acquisition, they've never been profitable in the first 6 months. So it was an amazing experience. And then crypto winter obviously came. And I think, we had to do obviously a lot of adapting to the new situation. From being a profitable company, we became a company that, let's say, is investing every month a lot of money. And unfortunately, as I said, this is not my first rodeo. I've been to startups before. You know that cash is king, and I had to do the most unfortunate step and say goodbye to about 90% of our workforce. And those were
And
great
and
people.
how many was that? Where were you in terms of headcount or revenue or traction, and where did you have to go to?
Right. So we were 70 people. We were taking in revenue a few millions before crypto winter, but then it became hundreds of thousands. Literally, our revenue was very tied to the price of the cryptocurrencies we were dealing with. Right. So if Bitcoin
Mm.
dropped almost 90%, our revenues also dropped 90%. And And then we had to. I think we were left 9 standing here in the company after being 70. So after you had this whole floor filled with people and life and product people, engineering and sales and everything, we were left with 9 people who we said, okay, this is like the commando force of our startup. We really believe in blockchain and what crypto would do to this world. We're not ready to give up, but if we'll keep hiring 70 people, there's no way we would live another 6 months, right? So about that time, we had to adapt, and we had to think, okay, what do we believe the most? And we said it's still the financial markets within blockchain, and what we think would do the most, let's say, impact would actually be around the world of payments, because cross-border payments are, I don't have to tell you that. They're not seamless, it's not easy, it's not cheap. I'm not going to get into all the obvious reasons, but we really started focusing on payments at that time. And that was just around the time that the folks at Libra or DM, the Facebook-led cryptocurrency, the artist formerly known as Libra, started to get together and to think about how that would come to life. And we were looking at what's happening over there at Facebook. And when I mean we were looking, I mean that we're all here in our company. Well, most of us are ex-military and ex-intelligence people. So we were looking at the different social networks like LinkedIn or Facebook HR postings, and we saw that there's a lot of blockchain postings, or people are changing their titles suddenly on LinkedIn. And we said, okay, something's happening over there at Facebook with blockchain. Let's start digging into that. And we started mapping up who's doing what, more or less, from the outside. And we spotted a few leaders in Facebook that are actually doing this. And I won't mention names, but I was tracking one of them, and I took a flight to Berlin because I found out one of them is going to be in a conference. I stalked them at the entrance to their hotel, and I told them, hey, I'm Goldi, how are you? It looks like you're doing something amazing in payments on blockchain. We're really good at this space. I think we can help. And after they didn't call security, I told our story and why we think we can help. And we ended up starting to work with what was then the Libra, then the DM Association, on helping them to build what would come to be the DM stablecoin later on, which I hope that would actually see the light of day either this year or next year. So we started focusing on payments, and that was like the early road for us to actually start working on payments, and then starting to build our platform that would allow PSPs, gateways, large merchants to integrate support for digital payments, specifically stablecoins, by the way. And then we also started working with Cello, which I don't know if you've ever covered in your podcast with the millions of episodes you've already done, but it's another amazing stablecoin project. I call them the Greenpeace of stablecoins because they're really about the important things in financial inclusion, and not just about getting more people into DeFi, doing 100x a day, and then rug pulling whatever is left of that currency. So anyway, that was our history and our path to payment. And really what we're focusing on today, as I said, is helping merchants, PSPs, acquirers, gateways to allow everyone who wants to accept stablecoins to do so super easy.
All right, man. Awesome progress so far. I want to ask you just briefly about the specifics. So the company, sounds like it went through quite a transition. Now you're advertising on the front page of the site, the easiest way to accept Cello stablecoins and other like DM payments. What is the focus from the business perspective when you think about the gaps in the market that you're trying to fill? Is it accepting stable coins? I mean, do you feel like, or how do you describe the gap that you're trying to fill and where the tech team is focused?
Right. So maybe you should zoom out for a second.
Sure.
I think stable coins are not a matter of is Facebook going to do it or not, or is Amazon going to do it or not, or I don't know, PayPal or any other company. It's going to happen anyway, right? I mean, stablecoins, CBDCs, that's the future of money. That's going to happen. Money's going to be digital. Whether governments are going to take 5, 10, 15 years to do so, anyway, it's going to happen. And the reason it's going to happen, and which is, I think, are the same reasons we're trying to push this forward, is that the financial rails today are either ineffective in terms of pricing and speed, or they're just not allowing for this common language of money around the world. And you know, Jeremy Allaire from Circle talks a lot about this in the same way as information, and I really like that comparison, in a way that the internet freed information. It created this rail that everyone could exchange information, and it's super easy. It doesn't matter where you are, as long as, you know, even if you're in Africa or in Latin America, as long as you have a cell phone with reception, you can now be part of that magic that's called the world of internet and consume whatever information you want. That's still not true for money. You still can't just, you know, send money, receive money, sell merchandise if you're a merchant in Morocco and receive payments, because you can't, because PayPal does not serve Morocco, they don't serve other territories, or etc. And that was really our push. And I think that, by the way, I think that what's happening today is that everyone understands this, and this is what I meant by taking a zoom out. There is this huge competition today by very, very large enterprises, from Visa and MasterCard, who are, you know, MasterCard has been working with, according to their website, something like 65 or even 85 different countries to help them to build CBDCs. Central bank digital currencies, right? Digital currencies who are issued by central banks. And Visa obviously has been talking a lot over the past year how they're now enabling USDC, which is a digital currency, to run through their network, and how they're investing in crypto, and they just bought an NFT, right? So that's them. And PayPal, obviously, in the last 6 months, maybe even 12 months, has been doing a lot of different steps to make sure they're part of that game as well, right? So they bought companies who are into digital currencies that do either custody or other solutions. They're now allowing people to buy Bitcoin, Ethereum, and to pay with that if anyone is, you know, silly enough to do this. So, and also one of the most, you know, known rumors across the financial newspaper industry is that PayPal is actually going to create their own stablecoin, which only makes sense. And on the left and on the other side, you have Facebook, who again already 2 years ago said, you know, we're going to create this currency. We're going to allow people to hold a wallet. Now, I don't think it's about the currency. I think that's what's happening today in finance, in fintech, in payments, whatever you want to call it, is that all those huge companies, from MasterCard, Visa, even Apple, obviously who's into fintech, they understand that money is going to be fully digital, that a company that already has trust of its users could actually become a bank, could become that entity that gives you a wallet, that gives you maybe a financial portal, where you, as you know, a user, a human being in a country, could actually run your entire financial life from their application. So I think there's actually like this race right now to which company would create the easiest fintech, bank-like, wallet-like, investment-like solution that would eventually capture the most users. Because when countries would actually create CBDCs, then Facebook wants you to use them as your portal to your financial life. Google wants you to use them, right? The only company, by the way, that I haven't seen in this space, which is strange, is Microsoft. Someone should definitely call them and say, hey, you're missing out on fintech. But that's for another podcast.
Yeah, totally. And so do you consider first your company to be in this race? I mean, do you look at, or do you more think of it as you're trying to sell shovels to the people digging for gold, I guess, by analogy?
Yeah, no, that's a great analogy. Look, I think it's the latter. I don't think that at least not at this point in our life, we have enough, I would say, firepower to be here for the next 15 years and tell everyone how to run their financial life. But we really want to make sure that every merchant slash company in this world would have the rails, the platform to start pushing digital currencies as part of their offering for merchants. Whether it's B2B or B2C2B, it doesn't really matter. We really try. We feel like we're like the I don't know, like the prophets at the gate at the entrance to the city, telling everyone, "Listen, this is going to happen. You got to have this infrastructure now." And some of them are listening, and some of them are not. I have a lot of talks with my. I'm going to say with my friends at EY, Ernst and Young, one of the accounting firms. I don't know if it's a good thing to have a lot of accounting friends, but what they keep telling me, they work with a lot of banks around blockchain. What they keep telling me is they look at this as, the banks are like dinosaurs, and they now need to choose if they want to get extinct, or not. And they can actually choose not to get extinct. They could actually choose to embrace digital rails, right? We see banks in the US like Signature or Silvergate actually doing this. But some banks are just saying, digital currencies, I don't know, it's just Bitcoin, it's just a fraud, it's just whatever. It's not, right? It's the beginning of a new era, probably. And you better be on that train. That's the way we see it.
Yeah. Do you feel like, I guess it's coming through a game of telephone through your friends now, but is the general gist of the attitude from banking executives, at least maybe in the US or across the world, is it that the more sophisticated leaders it's clicking and they're on board, or do you sense that there's a growing tension between, I would almost consider the banks on the side of the Federal Reserve and the governments, where they're very closely engaged, we'll call it, with governments? Is there growing tension between the crypto world and the government banking world, or do you feel like in large part they're on the same page and moving in the same direction?
So I think they're very much divided. I will say this, banks right now have a lot on their plates because, inflation is on the horizon or not. There's new banks who are trying to take their customer base with, a better dress up banking apps out there. And for them, I think a lot of those, let's call that executives in different banks, they see this world of digital currencies as just another annoying thing with the other thing that annoys them right now. But obviously that's not all of them. I don't think there's a bank today that does not have some sort of a subscription or implemented a service of custody of digital assets. I think they've all realized by now that that's a must, that's basic. Let's at least give our Nostro traders the ability to experience with that. Our innovation department, doesn't matter what. But not a lot of banks have taken the extra step to understand that their entire infrastructure should, at least internally, turn all their assets into digital assets, right? And that's a huge understanding for banking executives. And I've only seen a couple that had that aha moment, if we'll do this now, in 3, 4, 5 years, we'll already be ready for all of this digitization, securitization of asset that's going to come. So to your question, I would say that probably not more than, a very small single-digit number of the big banks around the world have made that realization. But I think it's inevitable that most of them would.
Yeah, totally. And so just the logistics of what you're building technically is do you consider it a front-end API for web developers at merchants to offer their customers the ability to accept stablecoins, and then behind the scenes you're providing a wallet, the customer sends stablecoins to that wallet, which you host, and then you in the back end send the merchant US dollars, or where am I wrong on that? Or how do I...
No. So you're actually very much right, right on the money. So merchants around the world, they don't care about how will they get their money. They worked really hard. They want to get their money. Now, most merchants around the world, especially SMBs, have already integrated with some sort of a payment service provider. And they don't want Goldie from First knocking on their door saying, you know what, you got to accept the stable coin. How about you do more integration with our platform? They do not care about that. They've already integrated with either Stripe or Adyen or PayU or Checkout.com, any other of those, Bill.com, whatever, of those large PSPs. And our approach says, you know what, they're probably right. Let's create a platform, an API-based platform we could offer the PSPs. So, for example, we're connected to PayU, which I mentioned. They have 450,000 merchants around the world, mostly in emerging markets. Now, we've integrated our stablecoin platform into their main platform of processing money. And that means that any one of those 450,000 merchants could actually go to their, let's call that a settings page or an admin portal, and say, you know what, from now on, I don't want to just accept Visa, Amex, or in PayPal. I also want to accept Celo or USDC. And they check a box, and then in the checkout page for their users, they will also have a checkout with a stablecoin, right? So our approach is, let's go to the PSPs. They're already connected to the merchants that we want to help. We'll integrate with them. And then, like you said, once there is a payment with a stablecoin, that payment would be redirected to us, and we would contact the user's wallet who wants to pay. We'll take the funds. We'll lock them if there's any need for that. We'll hold the stablecoins in a secured way for the merchant. And even if the merchant wants, within an hour, we could actually send that to their either digital wallet or to their bank account, right? And our hope is that merchants over time, we would be able to convince them that, you know what, you don't have to convert those digital dollars or digital peso or real in Brazil to fiat. You could actually leave it where it is. That's actually a safe place for your money to be at. And if you want to make payments out of this digital account, you could do that. But if you're not making payments, how about you make some yield on those on the funds that you've already collected? And then maybe, just maybe, we could offset all of your fees for processing with the yield you're making on the money you just made. And then the holy grail for us is offering merchants zero cost processing, right? So that whatever they're paying for processing, that's being offsetted by whatever they're doing with yield.
Yeah, and that's got to be a major incentive, right? I mean, merchants across the board, I imagine Visa would be the ones to lose on this, right? As things get more efficient, Visa's 2.8%, whatever they're taking on a per transaction, that's decreased down to, eventually zero. Merchants and customers see, I guess customers would see, a marginal decrease, but the merchants would see a zero transaction cost or close to it. Do you feel like that's inevitable as well? I mean, if Visa was on the line here, are they telling a different story? Do you feel like there's a place for transaction fees in the medium to long term, or how do you sort of see that?
I think that I would say that every industry has been slowly I've slowly been exposed to this race to the bottom of fees since technology has came into our life. Now, today it makes no sense for you to buy a stock or even hold an ETF, even if it's with not just with Robinhood, but also with Charles Schwab. You're paying zero for the purchase of that security. And 20 years ago, that would have been crazy. Like, obviously, you would pay a percentage and you would also pay like a monthly fee for them
Yeah.
to keep your securities. And no one would even think that would be zero, right? But and I think it's the same with credit cards. And specifically to your question, I think if Visa would be on this call, they would probably say that yes, they understand that the fee structure is going to change dramatically, and they would have to find other ways to provide other value from the trusted network they created for their merchants and acquirers, etc. Because that's really what Visa has, right? They have the trust of merchants around the world, or issuing banks, acquiring banks around the world, and they need to think about how are they doing more with that. And by the way, if you go to Visa's blog or MasterCard's blog, you would see that this is how they talk today. They don't say, we're here to be your plastic card providers. They're saying, we're here to provide you rails to move your money around the world in whatever way you choose to over our trusted networks, right? So they've already changed the tone.
Yeah, yeah, it does seem like I just think conceptually you have the different value prop pillars. So one of them is if a customer pays the merchant, that the money arrives. Like there was actually a major problem with payments with checks. A lot of people would go to grocery stores, they would pay with a paper check, and then of course the check would bounce. So then the plastic debit cards came around and said, hey merchant, a person can use the same idea as a check, but it's automatic and it's guaranteed. So we're going to charge you 3%. And then they said, okay, here's an idea of a credit card. So you don't have to have I think of a credit card more as a pitch to the customer as opposed to the merchant, because you don't have to have the money in order to spend it. And then it's also the upside of, like, I guess a third value to the customer is that you don't have to worry if your card is stolen, or we got you, or if you buy something, if the merchant did you wrong. So you buy something usually online and the merchant stiffs you, the idea of a chargeback. And merchants, from having been a merchant and started companies where you accept credit cards, like chargebacks, they're tough. I mean, they're threatened to close your account down if you get above a certain percentage chargebacks, and it very much favors the customer. If there's a chargeback issued, it's like as a merchant you don't have much of a say. So I think reducing that power on the customer side, there's people are going to want that a reassured guarantee. Say you accept, somebody selling shoes online accepts stablecoins. If I pay them in stablecoins and the shoes never arrive, or they're totally different than what they advertised, then I want some reassurance. And I think that would be the value prop that Visa could offer on the crypto rails, is like the idea of a charge, is keeping the idea of a chargeback, reducing the fee, but keeping the idea of a chargeback for the benefit of the customer. Seems like it would be difficult to do with just pure crypto payments. I mean, impossible to do sort of by definition. But I could see that. Are there other things that you think of are like value props that Visa would push out there other than chargebacks? Or, I mean, it seems pretty guaranteed. When you think about it, like if I send you Tether, it's going to get there. As long as I have the address right, I don't need any guarantee on that. That's pretty safe nowadays.
Yeah. So I think Visa could offer a lot of interesting things. I think that the buy now pay later world is obviously expanding drastically over the last 4 or 5 years, with obviously Affirm now being public and other companies. And I think that Visa could actually offer a lot of interesting things around that with cryptocurrencies, right? Like you have let's say you actually have even 100,000 worth of Bitcoin, because I don't know, you're a hodler and you want to pay for something. Maybe Visa could offer you, to get the money to pay for that, assuming you're using some of your funds as collateral. That's something that an entity as big as Visa could actually offer to its consumers. By the way, on the chargeback angle, first of all, I want to tell you that in Israel, where I live, there are no chargebacks. And the reason is, yeah, I know, it's crazy. The reason is if you call Amex or Visa, your bank, and you tell them, hey, I didn't get that service or something, then it's not as immediate as in the States, which is amazing. I've lived in the States for a while, but in the States, as you say, they just tell you, oh, sure, sir, of course, obviously we'll just refund your money and we'll take care of that with the merchant later. I can send you calls I've recorded with Amex, and where they say, yeah, well, take it up to the merchant. It's between you and him. Because in Israel, the law is different. But putting that aside, I think there are, with smart contracts, with digital currencies, we could actually create, and again, it might sound futuristic or sci-fi right now, but we could create really cool stuff around that. What I mean is, let's say you sell me, like you see the shoe example you just gave. Let's say you sold me a pair of shoes. I did send you the money, but it's now being, it's waiting in a smart contract, and you send me this, I don't know, this package, and it only opens when I scan the specific QR, and that reports to the smart contract. I got my shoes, you got your money because it got released, happy ending. And then maybe we could, it's a better experience for you and for me, and we can't dispute that specific thing that just happened. But again, there's probably millions of use cases with digital currencies, with smart contracts, that it's really hard for us to even imagine right now. Because I like that comparison that people say that, could you imagine in 1992, 1993, what we would do with the internet today? That we would be on this podcasting platform called Riverside and see each other from the other side of the world, and just click record, and I would look silly in my office. Probably not, but it's happening. So we could probably imagine crazy stuff with digital currencies and smart contracts for even 10 years from now, and we would be totally off on how the experience would be, right?
Yeah. Yeah, I almost think that the rule of thumb to follow on this is if you can imagine something that's better, it's going to exist, period. The only question is what time horizon. So it's like, yeah, we're talking on a 2D screen right now, and it's being recorded, and it's going on a 2D video platform, YouTube. It's like, why wouldn't that be 3D? Someday it'll be you're sitting there in 3D, and you're completely represented as if you were in the same room, and it's crystal clear and indistinguishable. Like, yeah, that probably will exist. And then I almost think the whole idea of money starts to dissolve. We don't have the physical assets, physical, tangible paper money like we used to, or we still do to some extent. And then it just kind of becomes secondary. We think of money as almost in this, I think of a lot of people think of money as the ends. There's like the means to the end. The end is the money. But when money becomes I almost see this trend in like millennial Gen Z where it's more of a minimalist mindset. I don't want things. People don't want to store things like they used to. The accumulation materialist mindset is sort of a generation ago. Like, people are more humble. You can see this by Zuckerberg and Bezos. A lot of the most wealthy people are wearing T-shirts. They're not flaunting their money. So I think of the purpose of it really is to do what you want to do as opposed to buy what you want to buy. And that when that starts to shift into the digital world, I think that's it's sprinkling right now with NFTs, and people are spending it on art. And it's like, it's not, we're moving up the chain of Maslow's hierarchy of needs. We have our house, we have our food. This is, of course, different throughout various societies, but generally speaking, human society on Earth is moving up the chain. And we get to a point where there will be a generation, maybe next, maybe a couple of generations from ours, where they think all their money is going to be spent on NFTs, digital art. Food is just delivered to their house. It's like a fraction of what they're paying in other digital currencies. And it's a trippy world because it's quite a bit different than how we think of it now. It'd be interesting. I don't know the answer to this, but I'm thinking what is the percentage of money spent on physical goods versus digital goods over time across different societies? And I bet that number starts to predictably converge on digital to some extent.
No, I think you're right.
Yeah. And I think stablecoins, this is something I want to ask you about. Stablecoin really is just a blockchain representation of a fiat currency, US dollar being the biggest, but there's other large stablecoins. Do you think stablecoins are a bridge to completely, crypto independent currencies that we use? How do you see the purpose of stablecoins?
No, that's a good question. Look, I think stablecoins are. We all know how they were created or why they were created. They were created because people were trading crypto and they didn't want to exchange that money and move it back to their bank before they make another trade. So they had to have this digital dollar to hold in the meantime. And now that was that reason. The reason it's happening now, and more, and the reason I think that USDC is now 30 billion in circulation, and there's like probably over 100 stable coins out there, is because there are more and more usages, but that are replacing actual money. Like, I think there was over a year ago, we already heard that Ripple is responsible for something like 40% of the remittance between the US and Mexico, the Ripple infrastructure. All right. And that might not be stable coins, but again, that was on a stable coin like infrastructure. And today we see more and more use cases. But that being said, stable coins are just a patch. I mean, they're a patch because the government are just moving too slow. And I'm not trying to criticize the government. I know, I haven't been a prime minister or a president myself. I'm sure it's a tough job, and they have a lot to handle. Again, especially for an Israeli prime minister, probably, but and they have a lot on their plate. But and so they haven't got around to saying to their central bank, listen, it is 2021, everything is fully digital. How about you just make this money fully digitized, please? And they haven't got around to that. And because there's a lot of regulatory risks, there's a lot of monetary considerations they have to think of, seniority of the funds, etc. It doesn't really matter. It would happen eventually. And right now, stable coins are just, corporates taking advantage, not in a bad way, taking advantage of this gap and helping governments and helping countries to push them to the next, digital frontier. That's the way I see it. And I have to say something about what you said before about this, trippy world and where is it going, the usage of money. There was a lot of talk before COVID that I think I haven't heard a lot of that over the past 2 years, but universal basic income is something that was very much talked about, I guess, in the last 10 years. And obviously that's because jobs are being taken away from people, and less jobs, I guess, are being created than those who are being taken away by robots, etc. And then the idea of universal basic income came to life. And I think that what you said is true. At some point, obviously, those who have more money would always have more money, but at some point, money would become this, something basic that we all have in a way to satisfy our Maslow pyramid of needs to some extent in different societies. And it would be much more liquid than what it is today. You would be receiving money as this resource, this streaming resource throughout the day, throughout the week, throughout the month, to use for whatever you need to use it for. And maybe that would be a minimalistic society. I mean, if you think of sci-fi movies we've seen 20, 30 years ago, I don't know, if you looked at Superman's home planet, Kal-El, everyone's wearing white, everything is minimalistic, everyone is not really buying anything, they're just walking around telepathizing with one another about life. So maybe you're right, maybe it is going exactly the direction. I think the only certain thing I've seen in my very short lifetime is that actually sci-fi movies were always right. Like everything they said is actually happening eventually. It just takes 40 years more than what they said it would be. Yeah.
I think that's very true. Certainly some sci-fi movies we don't want to head towards, the more dystopian movies, but I do think they serve as a warning as to what realistically could happen. I tend to think of the UBI and robots taking jobs concept as I sort of, by analogy, think of it as a river, and the river is the current. Actually, the word currency comes from a river. It's a current, and so it's always moving. And the river has different tributaries, so it branches off. And for a while, there's a big tributary, like a side river, and that might be, healthcare or transportation or Uber. And there's opportunity in Uber. You hear guys saying you got to buy a Prius, got to drive for Uber. You can make good money. You can provide value. So there's a currency opportunity there. But then side rivers dry up, but there's always another frontier. There's always a place that the river is flowing. So I think of it as like robots take jobs, true, but that's always happened. Technology displaces manual labor, but it's for the betterment of us collectively because it opens up new opportunities. What you're doing, what I'm doing, what many people on the internet are doing wasn't a job description 5 years ago, 10 years ago, certainly. So I think that continues to happen. And the game is to figure out where's the opportunity. Where can I recalibrate my skill sets, understand my interests, and then point it in a direction that's useful for other people. And I think if you think too seriously about it, you can convince yourself that robots are going to take all our jobs, and there's going to be this scarcity mindset that's plagues the world, and we're all going to be sitting around, and robots are going to. But I don't think that that's a reality. When I talk to entrepreneurs like you and other people, there's just an energy around, hey, let's build something cool. We don't have to use crypto, but we just want to make the world better and more interesting. So I think it's that the current never stops. It's just finding out identifying clearly and articulating where it is, and then showing people, hey, it's not too hard, right? You can learn these tools. You don't have to, if you're not a programmer, you don't have to program. You can be, you gave the first thing you said was, hey, I got in a plane and jumped in front of a Facebook executive building a blockchain. That didn't involve any programming knowledge. You sound like your expertise is more in people, connecting, sales, building an organization, a system, ideation. It's like everyone has to just find what they're good at and then point it in a direction where there is opportunity. And I think there's just way more opportunity than people conceptualize. It's just a limiting fenced walls around where those are.
No, you're
yeah.
No, go ahead. Yeah. Please continue.
Well, I want to throw it back to you and just ask you. So, being in Israel, do you feel that the U.S. I'm curious. You're just kind of commenting on, say, country by country. The U.S. certainly has a strong influence on global monetary policy. Our own domestic rules, regulations. Do you see certain countries, or maybe Israel, the U.S., or other countries that have done something really special and worth highlighting as to what is currently working, or maybe what is not working?
Well, that's a good question. I always try to think of not just about how countries are dealing with their monetary situation, but also with their let's call that with their regime. Like I don't know if you want to take the conversation there, but I always think of like, is capitalism the best we have? Is being a democratic country the best we have? Is China really that bad? Yes, but how do you control 1.5 billion people? I don't know. Anyway, but back to your question. Israel is like the 51st state of the U.S. So in a lot of ways, we're just very much, I would say, dependent on what U.S. regulators think or do before our regulators do as well. I think, and again, crypto is a great example for that, because in Israel, there are, well, at least in 2017, we had over 1,000 companies in crypto, which is a lot in terms of numbers here in Israel, and none of those companies had a bank account in a normal bank in Israel, because it wasn't allowed. And it's 2021, it's 4 years after, and it's still really hard to open a bank account for a crypto company here. And it's a bit different now in the US, because you have banks who are, they love crypto now, and they're offering you to buy crypto in their bank, which is something that even in the US, if you would come into a bank 2 years ago and say, hey, I want to store my Bitcoin here, you would have a sniper shoot you in the forehead. And now it's like, oh, sure, of course, come, we support Bitcoin, we love Bitcoin, it's the new thing. But that still hasn't proliferated fully into Israel. I think it's really actually a generational thing. There's There's two banks here who have very young CEOs who spend a lot of time abroad, some of in the US, and they think about this differently. But again, to your question, I think we're very much here. I guess we just copy paste what's happening in the US a lot of times in terms of regulations. Has any other country done something interesting? The obvious answer is right now is El Salvador, right?
Yeah.
They've done something that is, I still haven't been able to figure it out if that is a colossal fuck up that's going to happen there, and people are going to start robbing each other over Bitcoin and move to the other side of the border and sell that to the highest bidder, or are they 100% right? And they wouldn't care about the value of Bitcoin itself, and they would just use that as a means of payments over Lightning Network or anything else. I think the jury is still out on that one. I personally plan to visit there next month, so I would be more than happy to drop you a line and tell you how that was. But that's the most interesting experiment I've seen lately in economy.
Yeah. I would seriously love to talk to you, either when you're there or when you recently return, just to hear what it's like from people on the streets and accepting Bitcoin in reality. I think that there is a mandatory requirement to accept Bitcoin, is how they've, if you think about the policy, there's the qualitative, subjective, high-level signaling, and then there's the actual regulation. I think that the regulation says if you're a merchant, you have to offer Bitcoin as a payment gateway. I think are there other strong rules that they've imparted to make this change?
Not to the best of my knowledge. What you said is true, and I have been talking to several merchants who said, now we have to accept it. We actually have no idea how to do this, and we don't even know how to store whatever we're having. And I think that what's happening now in El Salvador is that, every other crypto company that hasn't found maybe its business yet are just trying to get someone from El Salvador and say, hey, we have this solution. I just want to go there from an anthropology standpoint, not even as first, just like I want to be in the street where everyone is paying with Bitcoin and see how that's like. I want to go into a bank and say, I want to open an account. What do you have for me? Like, what can I do here? It's super interesting for me, as a society, right, to learn how that would evolve over time.
Yeah, it really is. It really is. I'm sure a lot of people are also doing a similar thing, just seeing how it actually plays out. Well, cool, man. I really enjoyed talking to you here. Do you want to mention either if you're available on Twitter or any social network, or if there's anything that the company or yourself is looking for?
Yeah, of course. So thanks for the opportunity. So first of all, I want to thank you as well. I actually haven't looked at the clock, and it seems like we've already been here for almost 15 minutes, which is crazy. So thank you for being an amazing host. We're always looking for more merchants and PSPs who wants to accept stablecoins and get into this new era. But I guess what I really want to say, if there's someone listening to this podcast that obviously, again, it's called Around the Coin, so I would imagine you are into crypto in a way. But if you're not by now, you don't have to buy Bitcoin, but you do have to start learning more about what is a digital currency, what are digital assets, because in a few years from now, this would be the new normal. And you want to know about that before, so you could prepare. And there are amazing opportunities out there. So go out and read more.
Yeah. Check out. I'll ask the question for you. What is the DAG? At first, DAG, is that an acronym I should know, or?
So when we were arrogant and started that company, we said that's going to be a group of companies. It's going to be First Digital Assets Group. And like I said, we did custody, liquidity. We called that a group. Now we're doing payments. So we said, let's just cut that to DAG, First DAG. That's fine. And everyone's calling us first. An important lesson to entrepreneurs out there, you keep learning tough lessons. Even though this is my 8th startup, I had to learn that very simple lesson, maybe, that, hey, guess what? You can't do a lot of things on day one. Just focus on one, make it really good, move on to the second one.
Yeah. I like DAG, actually. I think one thing when you type in Google first, it's tough to rank on that. But if first, you type in first DAG, it's there's not many people searching for first DAG, so it's a good way to at least organic search get recognized.
Thank you. Yeah.
But yeah, man. Well, congrats again on all the progress. I really enjoyed our conversation, and for anyone who's interested, I encourage you reach out and shoot Ran a line.
Thank you.
All right,
Thanks, Mike.